Nobody's telling you this, that Canada's 2026 immigration cut isn't just affecting newcomers, it's affecting housing demand, prices and rents. For the last few years, Canada housing market was unbeatable. Prices kept climbing, rents were increasing, and the story was simple, that population growth will protect the housing demand. But now, Canada has started to slow its immigration. So if you are a buyer, investor or someone looking to move cities, staying in 2021 mindset will cost you real money. So in this video, we'll walk through what's changing and what numbers actually show. First, what exactly is changing? In the federal budget, the government says it will responsibly manage immigration to take pressure off the housing. The plan is to keep new permanent residents at less than 1% of the Canadian population beyond 2027 and cut temporary residents like international students and some workers to under 5% of the population, down from the peak of 7.6% in 2024. So that crowded feeling in 2023 and 2024 is starting to unwind. And what's important is that it isn't theoretical anymore. We can actually see the effect in the data. In third quarter of 2025, Canada's population fell by about 76,000 people. That is negative 0.2%. And the main reason was non-permanent residents, down about 176,000 in third quarter of 2025, after hitting a record high in October 2024. This is the first reversal after years of explosive growth. Now, let's look at this chart number 17, population growth chart from Budget 2025. It shows Canada's annual population growth from 2000 to the mid-2020s. You can see three very clear phases. From 2000 onward, the growth averaged around 1% per year, and after 2020, the growth jumps to over 3% per year, driven by extremely high immigration and temporary residents. And then the line drops sharply, with the M1 projection showing close to 0% or slightly negative for the next few years. So the message is simple, that supercharged population growth after 2020 is over. So when the demand gets slow, the prices don't fall everywhere, but they stop being automatically protected. So when population rises, especially the temporary residents, the rent rises fast because many people are chasing fewer units. That fuels up the rental market. But now opposite is happening. With the immigration at all-time low, these rental units are staying vacant, and that puts a lot of pressure on condo investors in Toronto and Vancouver because they still have to pay their mortgage payments. And with the unit staying vacant, they are going into negative cash flow. And when the carrying cost hurts, supply appears. That is why you are seeing the more units in the markets. A quick pause here. If you found this video helpful, please hit the like button so that many people can see this data-driven housing insights. And also, if you're trying to understand that where the Canadian housing market is heading, with not just headlines but with real numbers, consider subscribing. Alright, so let's look at the cities, like which cities are losing and which ones are winning. So forecast for 2026 national average housing prices says that the prices will stay flat, but it differs city by city. So if you can see here that in Toronto, the prices fell about 4.5%. The reason, like many investors own condos, fewer newcomers, that led to weaker rental demand. Same in Vancouver, about negative 3.5%. Very high prices and big drop in international students hurt entry-level demand. But in Calgary, the prices rose by 1.5%, like still gaining people from other provinces. Similar in Montreal, about 5%, like more affordable prices and at stable local buyer-based support growth. And in Quebec City, it went about plus 12%, very affordable and low inventory. So if you are planning to buy a condo in an area which relied heavily on international students, you will see more listings and you will have more negotiating power. In 2026, Ontario and BC are to see record high levels of inventory, and that will be good for buyers. But in a city which is affordable like Calgary, the prices might still go up because of the internal migration. Experts say that the mortgage will be within the range of 3.5 to 4.5%. So plan your budget accordingly. To sum it up, Canada isn't stopping immigration, but also you won't be seeing immigration of record high levels as you saw in 2020. As per chart 17, the population which went about 3%, now it's slowly, gradually decreasing to 0%, and that will affect housing demand, which reduces the automatic pressure on prices in expensive and big cities. That will be difficult for condo investors, but it will be good for buyers and renters. So key takeaway, don't use 2021 playbook in 2026 market. Look at the local numbers, not just headlines. Before you go, I'm curious. If you live in Canada, are you seeing this shift in your city? And if you're planning to buy in a year or two, does population slowdown makes you more confident or cautious? And finally, which city do you think will be affected most if this slowdown lasts longer than expected? Tell me in the comments below, because reading different cities' experience helps everyone what's actually happening on the ground. Until then, see you in the next video. Bye.